Hello everyone, and thank you for sticking around. Today is a very important day for the market. Do you guys know what today is? NVIDIA will be reporting earnings at 4 p.m. and guess what? We have a presentation just on that, so you're going to be able to see it in action right after this presentation. So thank you everyone. Thank you Tanya for having me here today. It's always great to present to you guys. My name is Anka Metcalf. I will be presenting today my Emini Trading Strategy, proven to work and generate consistent income and earnings season. We have traded 2 sessions so far last week on Thursday and the prior week on Thursday as well. I do have some slides prepared for you. We did Apple earnings and we did Google earnings as well. And we're going to be trading NVIDIA via NQ, Emini NASDAQ. Futures. So that's going to be extremely important for us, and keep in mind this is a very powerful strategy. So without further ado, I'm just going to jump into the presentation. A little bit about myself. My name is Anka Metcalf. I have 14 years of trading experience as a professional independent trader. Prior to becoming a professional independent trader, I have 10+ years of investment banking. Altogether, I've been dabbling with trading for about 20 years now, so that is a lot of time trading and being very dedicated to the market. I'm also the founder and CEO of TradeOutLoud.com, which is a trading education firm specialized in educating individuals how to day trade and swing trade the markets. I day trade the futures indices, gold and oil. I also look at other commodities from the swing trading standpoint, and I swing trade the equity market and also ETF. Also, I am the designer of a proprietary trading system that is based on price support resistance. We will talk a little bit about the system as we go along. We do offer live day trading and swing trading classes. Actually, we have one class that is coming up next week. And we also offer personal coaching, trading signal services for traders that are interested and are educated, because you should not follow a chat room or a signal service if you're not educated. I'm also a permanent contributor to some of these financial media outlets, technical analysis of stock and commodities, active trader, your trading edge, etc., etc. If you want to get a hold of us, you can reach us on our website. It is TradeOutLoud.com, or any of the Trade Out Loud handle, whether it is Facebook, Twitter, YouTube, LinkedIn, etc. So our agenda for today, like promised, I will be talking to you about why traders switch to futures trading and why is that happening. And I'm going to tell you a little bit about futures, about how I became interested in futures trading, followed by the #1 trading strategy to generate consistent income trading in the first 2 hours of the trading day, but not necessarily only in those 2 hours of the day, because I do have a surprise for you on how to exploit earnings to trade futures and what Emini to trade in earnings season. We're in full swing earnings season. We still have some powerful stocks that are due to report earnings, and how to follow the institutional money flow. First of all, let's start by why futures. Well, first of all, a lot of traders gravitate towards futures trading because of the relative low startup cost. It only requires you to open, it only requires you about $5,000 to open an account, and that is the minimum amount required by your broker. Amounts may vary depending on broker, so do your due diligence. Versus $25,000 if you want to open a stock day trading account. And guess what? If you lose a penny or a dollar, you lose your day trading status. So there you go. Back to square one. You have to come up with more capital. Also, with futures trading, you actually will have smaller position moves and more gain, and I will elaborate on that in the next few slides. So you need very small position moves in order to make money. So if you understand technical analysis, because this is a technical game that we're playing in the futures market, is a highly technical game that worked to the T. Yesterday, the day before yesterday, we actually hosted an open house. We had close to 447, we actually had 447 traders in the room. It was a jam-packed room. The outcome was remarkable. Okay, So you can have greater leverage, minimal watch list. I will share with you my watch list. You're going to be super focused. There's no scanning. You don't have to pay attention to anything else. You don't have to pay the cost of a scanner or etc. Having a small watch list, you will have more focus on your day-to-day trading. And take a short position with these, no uptick rule. Keep in mind, if you're a stock trader, some stocks may be hard to borrow. So guess what? You're in the middle of trading and you haven't found anything that fits your trading plan or fits your trading criteria. So guess what? You're going to go back to the drawing board. You're going to go back and try to scan for a stock. Now that takes time. By the time you find the stock, by the time you find the setup and wait for the setup in the stock, you actually push the button and guess what? You get a rejection button. Why? Because the stock is hard to borrow, so you can't short it. You don't have that issue with futures trading. You have reliable volume. You have better commissions. And guess what? Pretty soon you are going to be trading Bitcoin as well through a futures contract. You have no special indicators. We don't use any special indicators. Guys, the only people that are making money off these indicators are the people that are selling these indicators. Price is king and price action is the one that rules. You have a lot of tax advantages. You have the 60-40 rule, simplified reporting. At the end of the year, guess what? You get a 1099-B B form from your broker, and you actually submit that to your tax return, so you don't need to have an extra expense. You could actually, this time, if you're only trading futures that year, you can report your taxes yourself. So it's super, super simple. Plus, you get lower income tax rates. You can talk to your accountant more about the tax advantages of trading futures, but of course, you can surf the web and try to see try to identify more advantages. Also, time flexibility. It is a 24-hour market, so if you have a day job, you can absolutely go into the market in the afternoon trading session. Today, we had a stellar session. There was so much money to be made in the market with clear setups. Following a very choppy morning session, a session where literally there was close to nothing to trade. Although I traded, I will show you my trades for today. So time flexibility is a big thing. You have a job, you're working in the morning, you can trade the afternoon. You work in the afternoon, you can trade the morning. Or you can put up a trade, or you can learn how to swing trade and take advantage of the market without having to interfere with the high-frequency trading computers that you have on a day-to-day basis for day trading. You could trade indexes, you could trade market indexes like the Emini Dow, Emini NASDAQ, Emini S&P 500, Emini Russell. You could trade currencies, you could trade the euro, you could trade the dollar, you could trade the yen, etc., or even currency pairs. Commodities like copper and natural gas, which are super hot right now, and other commodities, you know, like gold and oil and etc. And they have had pretty strong moves lately. So take advantage for that. First of all, for me, why I made the switch to full-time futures is because I've worked in financial industries for a very long time, and for me, a big thing was the commuting, because I was traveling about 3 hours a day, an hour and a half each way. So now I actually trade less than I was commuting before, and this is why I love trading. You can work from the comfort of your own home, and you set your own hours. And guess what? Sometimes, you know, there's not a trade that is setting up in the morning, but it may be a trade that is setting up in the afternoon. So you just go for a walk, come back, look at the market. If there's something setting up, you take the trade. The market, just because the market is open and because you see the price move, it doesn't necessarily mean that you need to trade. You need to push the button. No, all you have to do is wait for the proper setup. I will share with you my #1 trading strategy. Plus, you take time off whenever you want. You set your own hours. You could actually go on vacation and take your iPad with you or your laptop with you, and 100% of the time, this is what I do. So I travel with my trading computers, and I still trade on the go. And it's not an addiction. It's the fact that why would you leave money laying around on the table where you can have a good risk and a good reward? You evaluate the trade. You just take the trade. Just push the button. It's not like really hard, intense labor, okay? This is my day trading focus. And for those of you that don't know me and don't know what I trade. In the first 2 hours in the morning, this is my trading universe, and this is what I focus on. I focus only on 4 charts. This is all. There's no scanning requirements. I don't need to look at earnings for this in the morning. I don't need to look at anything. I have all the information. It is a continuous market. The equities market is not a continuous market. It opens at 9:30 in the morning and it closes at 4 p.m. Eastern. Well, guess what? In the meantime, while you're sleeping and while the stock market is off, there are a lot of things that are happening worldwide, right? And that moves the market. So you can take advantage of those moves. Plus, the advantage of having a continuous market is that you have all of the geopolitical, you have all the economic events that happen worldwide that are influencing the U.S. market right there built in. So you're not going to find yourself with surprises with gaps up and gaps down. You have continuous trading, and that's a big advantage in evaluating support resistance levels and evaluating the overall technical chart. So why traders switch to futures trading? Well, let me share with you why. If a trader, let's say, wants to trade the Emini, if a trader wants to trade the Qs, right, and that's the ETF, right, that's NASDAQ, and let's say it's priced at $151, and it was at this price last year this time when I prepared this presentation, the trader needs over $7,500 to buy 100 shares. Now, you know that 100 shares are not going to get you anywhere, because if the price moves up 1 cent, you only make $1. So if the price goes up 50 cents, you only make, guess what, $50. So you need a lot of room to continue higher. So on a 60-cent move, you only gain $50 on 100 shares. But if a trader wants to day trade the Emini NASDAQ that is priced, let's say, at 61.20, that was last week. Now, keep in mind, the Emini NASDAQ is priced way higher and is priced at over 6,300. So the trader will need about 49.50 to buy one contract. So if the price goes up 50 points, which is pretty considerable amount of points for NASDAQ, but guess what? It can move. Take a look at today. We're going to take a look at the market today. So it moved today a lot, right? Today it moved a lot, and I'm looking at a chart right here. I'm going to pinpoint the chart right here so you guys can see it. All right, so this is the move for today. I'm going to put it on a 5-minute chart so you could actually see where it moved. So from 63.07, right? From 63.07, it moved all the way to 63.45. So this is the way NASDAQ has moved today, and it got us used. It's up 30 points on the day, right? 30 points on the day. Each point is $20. So just so you understand and have a correlation between the ETF and the futures market, I have designed this slide for you and actually took a trade with 100 shares. You could see the shares right here, 100 shares in the Qs, in the ETF and the Qs. You can see the price right here. The yellow highlighted area is the entry price. It moves 1 cent up at 151.48. You could see it right here where the price bubble is. You only make $1. Okay, and take a look at the buying power and effect right here, 75.74. In comparison, take a look at the same time with the same setup, a long position was initiated in NASDAQ, and this is what I did for you. Took a position long last week for this example. And you can see it right here, 6221.75. This is the entry. And if it moved 1 point, if it moved 1 tick, and this is 1 tick, only 1 tick, right? That is $5. Okay, $5. So for 1 point, that is $20. Now take a look. After 20 minutes of trading, this is one of our signature trades. Okay, this is one of our signature trades with very tight entries on November 2nd. The trade duration was 20 minutes, from 2:06 to 2:26 p.m. Eastern. Okay, this is the entry, this was the stop, this was the follow-through that happened. 100 shares, remember the trade that was initiated with only 100 shares, right? In about 20 minutes, we made 32 cents. I'm sorry, $32. Okay, we just made $32. In comparison, and I just switched the slide, you can see that the charts are extremely similar, right? Similar price action. And all you need to do is switch the symbol, because if I would have hidden the symbol and if I would have hidden the price, you wouldn't even know that this is a different chart. You would actually say, yeah, you know what, these are the Qs. These are still the Qs. But no, this is NASDAQ. You can see it right here. Same signature entry at a price level of significance. And November 2nd, trade duration 20 minutes from 206 to 226, exact same period of time for the trade that we initiated in the Qs, $250. Okay, these are real trades, guys. These are real trades. You can see the timestamp right here. Okay, it is February 2nd. You can see it. It's from last week. This is how I love to exemplify. So would you rather trade the Qs? So I'm just asking you guys. You could just post it here in the room, yes or no. Would you rather trade the Qs and for the same amount of time that you spend in the trade with a higher buying power to make $32, or would you rather trade the futures market in the same 20 minutes, same setup, same duration? Would you rather make $250? I mean, I think it's more efficient. If you ask me, you know, it's about time efficiency. Like if I'm dedicating my time to spending in front of the computer, I want my time to pay me, right? And I want my strategy to pay me. I don't want to go for $32, right? And I don't want to spend $7,589 and change for 100 shares, where I can actually have a lesser buying power of $49.50 and actually make more. So to me, it makes much more sense. And if this doesn't convince you, really, I would love to hear why are you still trading stocks? Okay, so what makes the futures market tick? And then we're going to get right into the strategy. Well, first of all, we need to understand what literally makes this market move. Well, first of all, there are the economic events. This week, we haven't had a lot of economic events. Everybody's waiting on the tax reform bill, and investors are just driving the market higher. I think the market is going to continue to go higher, and that is because we have a lot of mergers that are happening, and a lot of takeovers that are happening, and this is just pushing the market higher. We had a lot of powerful earnings from Google, from Amazon, from Netflix, from Microsoft. From Apple, and now today we have another earnings report that is coming out from NVIDIA. These are powerhouses that are literally powering the market. Keep in mind that today, with today's earnings, NVIDIA, we already had a huge rally in NASDAQ today. Really nice break, new highs, all-time highs once again. So very good follow through today in today's afternoon. So this the earnings that are coming from NVIDIA are going to be a catalyst, because this can propel the market even higher to new highs. So yes, we look for economic events and we look for earnings. These are the number 1 and 2 elements that are powering the market, or that can take the market down with it. Now, these stocks that I've just mentioned, they represent big areas. They represent they are huge within their indexes. So that's the reason why they influence the market. So you don't need a group of us or a sector to push the market. These stocks have a tremendous power within their index. And then news. You have a healthcare reform, tax reform, anything that comes from Washington. The market is very sensitive, and it's listening into whatever is happening in the market. So you have to be aware and price in everything with support, resistance, determine the money flow, and determine where you have that sensibility to the market. We've seen from the last 3 days that 6,300 in NASDAQ, and I'm going to show you very quickly here a chart of NASDAQ, right? 6,300, going to zoom in a little bit. Okay, 6,300 was the big area right here, right? Was the absolute big area. I'm going to use my cursor here. So we did have actually on Monday, we did have a call long at 6,300 with a target into the 20 and into the 25, and we had follow through, and we had hit target in the extended session. And then yesterday we did have a buy again. So we did have a buy signal again at 6,300, and we also had a target into the 20 and the 25. And guess what? It reached our targets in the extended session. So we did have a lot of symmetry. All these pullbacks that happened very early in the New York trading session were bought. Okay, so this is something that we teach in class. We teach traders how to identify the money flow. And this is where the money flow is. You have to learn how to read the psychology behind the candlesticks. Not only read blindly the candlesticks saying, okay, this is green, this is red, this is support, this is resistance. Our strategy is based on 7 layers of support, resistance, and key areas and key levels with precise timing. And I'm going to share with you again today, I'm going to show you some charts that we had, some trades that we've taken. So once again today, we didn't really drop down to 6,300, but we stabilized in price as 6,305. 6,305 was the catalyst right here. And then again, we had the buy, and we actually took it long. We actually tried a scalp short. Both Monday and Tuesday, we had a scalp short into the 6,300, and then we reversed and we went long. But again, today, we tried the same strategy. Calculating this measured move into the 6,300, but it didn't have follow through. It stopped at 07 this time. It stopped at 07. It didn't have follow through to the downside, and then we immediately stopped out of the trade and went long, right? Because it was tightening up. It was a sign that it was tightening up and it was reversing. And we had a fabulous afternoon. And we not only that we traded NASDAQ, but we traded Russell as well. Okay, so now let's go to the #1 trading strategy. And keep in mind, you don't need a sophisticated, you don't need to learn 10 strategies. And by the way, we do teach 10 strategies in our classes, and we teach traders to trade any market environment. So we definitely have 10 strategies that we teach traders. We teach strategies that apply to the open market. We teach strategies for the doldrum period. We teach strategies after the doldrum period, and we teach strategies for the London and New York trading session open, and we teach strategies for the Asian session. So we do teach all these strategies, but all in all, traders only need to master one strategy. And a specific strategy is nothing else than a specific set of conditions which outline the plot. What is the plot of the trade? Does anybody know what the plot of the trade is? So when you're looking at a chart, you're trying to plot the chart. So what does plotting the chart mean? It means that you're trying to find your entry, you're trying to find your stop. So it's not about pushing buttons. Trading is not about pushing buttons. It's about calculating. It's a mathematical drill, if you will. So it's about entry, it's about stop, it's about setting a target, and guess what? Last but not least, the risk. How much money are you willing to risk on that specific trade? The pullback, so we teach one strategy that is based, and this strategy that I'm going to share with you are pullbacks to specific areas for long and short. So basically, this is one of the most basic strategies that are out there, and one of the most simplest strategies that are out there. Pullbacks to specific areas, whether you're going to go long or short. Keep in mind, in this market, you can only scalp to the short side and go long day trades or swing trades to the positive territory to new higher target areas. Or breakout and breakdowns that are super powerful, and I have example of both of these strategies that you can use. They can be used on the same chart, or they can be used together. So what I'm going to be sharing with you right now is how you identify these, because sometimes in a day like yesterday, keep in mind, yesterday we did have the market that opened up and continued higher, 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 right? So the one thing that you need to realize that there are timings in the market. The market is timed, okay? The market works in cycles, and the market is timed. You often hear a lot of commentators and analysts on CNBC saying that it's not the right time in the market, or it's the right time in the market, or you hear a lot of traders saying maybe some know, maybe some don't. But this timing in the market is very precise. So for the New York trading session, because this is what we're talking about and this is what I trade right now and I'm talking to you about, For the New York trading session, these are the specific times that you need to pay attention to. If you are getting a straight move from 9:30 to 10 o'clock, at 10 o'clock you should expect a pullback. Shallow or steep, depending on the news and the environment and the market environment. If you're getting a shallow pullback, the next setup that is forming is going to be forming at around 10:30, give or take about 10 minutes. And that's when you receive the rotation back to the high, and this is going to challenge the 10 a.m. high. If you're breaking up, above the 10 a.m. high, odds are you're going to run into 11:15 to 11:30. So you're going to be in that trade for a longer period of time. If you're taking a trade in the morning, and we do have strategies that we teach in our class, it is the 9:32 strategies, the 9:35 strategy, and the 9:45 strategy. So keep in mind, within these 15 minutes right here, you have the most odds of the setups that will align for you. Between 9:30 and 9:45, your maximum concentration and attention should be on those charts. And I know there are a lot of traders that are asking me, okay, so I'm going to look at a chart. What chart are you looking at, and what time frame are you using? I'm using the 1 and the 2 minute chart correlated. I use time alignment, so I do have a multi-time alignment chart when I look at it, and I look at all the time frames, right? Because you know that the higher time frames are going to dictate what the 2 minute charts are doing. But then for a trader that is not well educated, that trader will only look on the 2 minute chart, and that trader is going to be the trader with the blinds on, that has no idea how to trade, and is never going to make it in this industry, because you need to use time alignment. You need to correlate your higher time frames, the hourly chart and the daily chart, with your 2 minute chart. If you don't know how to do that, none of the trading works. Successful traders know how to correlate this. And this is one of the best kept secrets, because if you, the question that you should be asking is, how do you correlate time frames? The question that you should be asking, what other chart are you looking for? And when you're determining your buys, when you're determining your direction, what are you looking at in order to determine that? Because traders are sneaky, and a lot of educators are showing you a 2 minute chart or a 5 minute chart or whatever chart, but they're not telling you what time frame they're using to form their bias, and that is a big downfall. So when you're taking trades from 9:30 to 9:45, expect at 10 o'clock to layer out of the trade, scale out of the trade. At 10 o'clock reversal time, any sign of reversal should be a trail out of the trade. And then wait for the pullback at 10:30, leg in at 10:30, and today again we did leg in into a trade at 10:30, and we took it higher, and we actually got out of the trade very close to 11:15. So trades that are initiated from 10:30, you have the possibility to you will definitely stay in these trades for a longer period of time. And then again, every pullback is viable from that point forward, because if you're getting a strong market that is taking the 10 a.m. highs, odds are the market is going to continue higher. And this is strategy number 1. Now, there's a deviation from strategy number 1, because this is basically the strategy: buy between 9:30 and 9:45 and carry it straight into 10:30. At 10:30, you're going to look to tighten your stop, or obviously scale out of the trade, or at the first sign of reversal, take your trade off the table and wait for the pullback at 10:30. But there's another instance of this trade, and that is if you're getting a choppy market like we had today. So yesterday we had a clear shot into 10 o'clock. At 10 o'clock we had the reversal started, right? And we have the setup that happened later in the day. And today we had this garbage type of market in the morning. It was a zigzag chop box market, and this is the zigzag represented here. And most likely this zigzagging market is from 9:30 to 9:45, but sometimes it's right into 10 o'clock. Okay, sometimes it's right into 10 o'clock, and that is so confusing, and that's when you're going to wait for a break of 10 o'clock in order to continue higher, and the trail is going to be the same way as for the prior chart that you've seen. So at 10 o'clock, what you're going to be looking for is first sign of reversal. You're going to take your trade off the table. You're going to wait patiently for the pullback. I don't recommend scalping this portion of the trade for the downside, and you're going to look to leg in for the bigger portion of the trade. So any trader that was shorting today the market got his butt kicked, okay? Because that is not the way to trade. You have to go with what other time frames are telling you. Time alignment is everything. Okay, so let me share with you guys a trade that we've done last week, and actually this is a trade. You can see the times. You can see. Oh, obviously you can see the timestamp right here. So this is where we took it long, and this is where we closed the trade. You can see the prices right here. So this is exactly what I mean by taking the trade at the right timing. So we got to follow through to the downside right from the open, and guess what? We knew that this was a long right here. How do we know it was a long? Well, because it was into the 945, we had clear signs of this index bottoming out right here, and we took it long. We took it long here at 62.30 for 10 points into the 62.40. And by the way, guys, for those of you that are futures traders here, we don't trade with ticks. Ticks are something for amateurs. We trade points. Okay, we go for points. We go for 5 points, 10 points, 20 points, 30 points. We don't go for ticks. What is 2 ticks? What is 3 ticks? What, are you kidding me? Like, I'm spending all this time in front of the market and putting all this effort into what? To make 3 ticks? No, that's out of the question. So we're going for points. You can see the clear signals here. So we made 10 points in this move, and then we were done. Okay, then we were done, and then it was the slop stop. We're not interested in shorting this. Okay, not interested in shorting this. And this was, we knew how to take profit. Why? Because take a look at here. You see my cursor here at 10 o'clock? You see my cursor here at 10 o'clock? 10 o'clock reversal time was approaching. Okay, and we wanted to be done. Okay, here's this other strategy. Remember, I was talking to you about the zigzag. Okay, I was talking to you about the zigzag. All right, strong resistance, strong overhead resistance. Right here, my cursor is. This was the short entry. This was the stop right here that we applied, and the follow through to the downside into 10 o'clock. This was the short right here from this level, from 23380. This is where we shorted actually a little bit above this, and we covered at 23,300. Okay, 23,300. This is a trade that we've done. Okay, and take a look at the timestamp. It was last week. Okay, and then again, 10 o'clock reversal time, having the confidence of a system that works, because we don't teach just a strategy. We don't teach you where to enter. We don't teach you just where to place a stop or how to calculate a target. These are basic things. We teach you the whole entire system for you to be successful, how to trail, what the psychology behind the candlesticks, what these reversal times are, what the location, key locations are. Did you guys know that there are 4 price points that are prone to buying pressure, selling pressure, and also target setting that all institutional traders are paying attention to? This is the best kept secret. You're not going to see this secret revealed with any other trading strategy out there and with any other trading educator out there, not unless they have been trading and they have been educated by a professional trader. And I'm not talking about a professional trader that trades from his basement. I'm talking about an institutional trader. So precise timing is when these rotations are happening back to the upside. So we took it to the short side and to the upside. It was an incredible, profitable day. Also, November 8th, this is today, guys. This is today. So we took it short once. So we had this trade short. And then again, we had the long here. So we had a short. We had a 5-point loss in the short, and then we took it long here because we were scalping, once again, our strategy in place, right? We were scalping from the top, cover at the bottom, and then flip at the bottom and take it to the top back again. The same thing that we've done on Monday and Tuesday, buy it into the 63, but this time it didn't want to go. It didn't want to cooperate to 63, so it wanted to establish a higher level. So we went all in on that higher level. You could see it right here at 63.20. And in fact, we sold at 63.2975. 63.30 was the target, was met right at 63.30, but this is the price that I got slipped to. So I got slipped 1 tick, right? So guess what, guys? Guess what? 10 points, right? So I came ahead 10 points. So I lost 5 points, but I made 10 points in this one. So guess what? All in all, I'm up 5 points. So I'm not talking about ticks. This is another trade that's set up in the afternoon trading session. You can see it right here. I was trading it with with 1 contract, 1 in, 1 out, and you can see the result, $220 by using less than $5,000 buying power. By using, you can see the timestamp right here. It was at 2 o'clock. At 2 o'clock, the trade was closed. 2 o'clock, the trade was closed. Using our strategies. Using our strategy. So if you're thinking about, learning a system, learning a system that works for you, learning precise areas where to enter, precise areas where to place stops, precise areas where to place targets, how to trail so you have minimal emotion involved, how to trail in such a manner where you can bring your stop to a location where it breaks even so you can play with the bank's money so you don't lose on your trades. Okay, here's another example of the trade of a short $200 with one contract. Okay, with one contract. Now, how long do you have to be by trading with 100 shares if you're trading a stock? That's a lot, right? A lot. Okay, so let's take a look at another trade and $250. Okay, $250 on this trade. Let's take a look at another trade, and this is from November 2nd. This is not today here, by the way. This is November 2nd. You can see the timestamp right here. And this is $515 on this particular trade in NASDAQ. Trading one contract, okay? So we had this webinar. We had pretty much a similar webinar last week when we presented on November 2nd, and I wanted to share with you guys on that. We love to trade on that specific day to show traders how what you could have realized the same day that you listened into this webinar. Okay, so we're putting our money where our strategy is, right? So on the same day. So if you would have traded with us, if you would have been one of our students, if we would have educated you last week, you could have made on this day 50% of your account. 15%. Do you know that some hedge funds would kill to make 15% in a year? Some hedge funds would kill to make 15% of the year. Okay, we more than doubled a $5,000 account. We had a $5,000 account challenge, and our account is up, I guess, about $13,000 right now, or even more, from January. Without the $5,000 starting capital, that's only profit. If I add that in, we're close to 18,000. Okay, so you can see it right here, one by one, little piece by little piece, it adds up. It adds up. Trade 1 200, trade 2 250, trade 3 300, $750 on a $5,000 account. Are you kidding me? I take this any time of the day. Now, keep in mind, you're not going to make this money every day. There are some losses you can lose, right? But our losses do not exceed, let's say, $200 to $300 a day. $200 to $300 a day, and that's it. Okay. Now, today. Take a look at today. First trade, $100, right? And these are morning trades. $100 we lost on the first trade. On the second trade we made $200. On the third trade we made $220. That's $320 on a $5,000 account. That's 7% in a day. Okay, that's 7% in a day. Okay, so how to exploit earnings, because we only have 5 minutes left, and I want to share with you how you can exploit earnings to trade futures. First of all, when you're trading futures, you have to pay very close attention to the activity that is within the index of Dow, the S&P 500, NASDAQ, and Russell. Why? Because there are big components within these indices that are going to influence the movement in these indices, right? So when do you trade earnings? You trade earnings before the market open and after the market closes. That's when you trade them, okay? You trade them for a limited time of about 3 to 5 minutes, and then you're done. So how to prepare? You need to know when they report and have a good understanding of prior earnings behavior of the correlated stock that you will be trading via the corresponding index. And obviously you need your earnings calendar, because you need to determine what are the big stocks that are going to determine the move within the index. Because if there's a little baby stock within, I can't get, let's say, Vodafone, right, within the S&P 500, that's not going to be a big influencer for the S&P 500, right? You have to have something really, really big. Let's say energy stocks are big, right? If you're having a move in the energy stocks or in the energy sector, that's going to take the S&P higher or lower, okay? So you have to have something that has a considerable size within the index. Like I mentioned before, 2 weeks ago, we traded Google, Amazon, Microsoft via NASDAQ. Right? So we traded NASDAQ. You don't have to trade Google. Maybe you don't have that much money to trade Google, and you don't need options. Options are extremely, extremely, extremely risky, okay? So I'm not going to trade Google. If you don't have money, you don't have to trade Google. If you don't have enough money, take a look at these prices, guys, here, 1,093, 1,034, okay? Or Microsoft, maybe you don't have enough money in your account to trade these, but you can trade it. You can trade them via NASDAQ. How easy is that? Take a look at this move, guys. Take a look at this move and the continuation of the move. Take a look at the move and the continuation of the move. And by the way, I have traded this live with my students, okay? Everybody that took the class, they take advantage of the private mentoring with me. We have sessions from time to time, and especially when we trade these earnings, right? And we got together this afternoon, 2 weeks ago, and we traded this. Last week, okay? And this is the total, guys, by the way, here from that earnings, small pop, and this is in 15 minutes, okay? This gain is in 15 minutes. You could go to youtube.com. We have a video there of the actual trade, with the live trade, okay? Today, we will take advantage of NVIDIA earnings, and we're going to be trading NVIDIA via NASDAQ, okay? This is what we're going to be watching. We're going to be watching side-by-side NASDAQ and NVIDIA. We're not going to be trading NVIDIA, but we're going to be trading NASDAQ, okay? And we're going to put our whole system in place. It's not that we're going to put the strategy in place, because you're not going to get anywhere by placing only a strategy in place, okay? You have to know your entry, your stop, your timing, your target, your risk, position sizing, etc. There are so many ingredients for a successful trade. It's ridiculous. If you don't take advantage of all these ingredients, the recipe is not going to work out. Okay, it's not going to work out. I mean, try baking bread without adding a little bit of salt. It's bland. It doesn't have any kind of taste. So if you don't know how to position size, you could take that trade, but without proper position size, it doesn't have. It will not have any flavor. If you have a $20,000 account, how many contracts are you going to take per trade? If you have a $5,000 account, it's obvious you're going to be trading only with one contract. But as your account grows, and if you have a larger account, you need to know how to position size. How do you position size in futures? Because that's a whole different animal. It's not the same thing as you're trading stocks. You have to know how to do that. So we have a new Power Income Day Trading Futures course that is starting this Monday, November 13th to the 17th, and it's an educational class from 5 p.m. to 8 p.m. Eastern Time, followed by a trading lab, November 20th to the 27th, from 9 a.m. to 11 a.m. Eastern. You get to trade with me live. Plus, we do some multiple sessions, especially during earnings season. You get live class. It's more than 15 hours of education, and trust me, it is so much education and comprehensive education. Your head is going to spin. Live strategy implementation, 10 hours, more than 10 hours you're going to be spending with me, and how to implement what you have just learned in class. Guys, if you want to learn how to trade, you're not going to be learning how to trade a proper system if you read a book, if you attend just one webinar, if you try to piece it together, or if you buy a DVD. You have to have someone that is trading on your side. We offer you unlimited retakes. We record oral classes. You get a course manual that is 400 plus pages. You get unlimited support to me and my staff. You also have a professional platform layout, because that's half of the battle. You have, we offer you risk chart. We show you how to position size, how to place order videos, etc. Plus, if you take the class, it's valid only for this November class, only for this class. We're going to offer you the Futures Swing Trading class in December for free. It is a $3,000 value. We're never going to do this again, ever. This is the only time, because it's a lot of work and it's a lot of proprietary information that we're sharing. We're never going to do it again. But we're going to sell it separate. We're going to sell it separate. $29.99 it's going to be. December window dressing class is going to be a $995 class. It's going to be advertised very soon, and this is going to take advantage of window dressing, January effects, Santa rally, etc. You're going to get ahead of all the traders, knowing how hedge funds are trading. You're going to have information that is your top-notch information on how to trade this. It's going to be an aha over aha moment. Plus, you have 2 months free access to our future signal service. It is a system that will teach you when to buy, where to buy, and what to trade. It will teach you advanced risk management and money management, advanced technical analysis, and best of all, you're going to be using this on any system that you trade, whether it is in any market that you trade, stock market, futures market, currency market, etc., forex market. It's the most powerful day trading chart pattern. We're going to teach you that, how to exploit them, and how to use simple yet powerful indicators, and much more. So we teach you this trading system. It's very easy to understand and apply for new, intermediate, or advanced traders. So if you're not profitable in trading, guys, it is time. Get ready. The market is going to get ready for a powerful 2018. We're going to get Bitcoin here in the future. So we're going to be starting to trade Bitcoin very, very soon, and that's very exciting. Super excited and hyped about that. All in all, guys, if you're interested in the class, you can feel free to email me. You have the email right here on the bottom. It is info@tradeoutloud.com, or you can call me at 561-865-6758. You have the number right here. Shoot us an email. We'll send you the number if you want to talk to us about the class. If you need more information about the class curriculum, etc. It is an excellent class. We have amazing feedback from this class. Email us. And keep it in mind, not only that the trading lab is waived, guys, because the class is only a 5-day class, but we have the trading lab that is waived. You're getting also the swing trading class, so that's about $6,000 savings right there. We're never going to do this again, so we're going to be offering the class at the regular price. It's going to be $4,995 only for the 5-day, and that's it. Only for the 5 days. So if you want to hop on board, this is the time. Start a brand new 2018 with education, right? You have time to practice in a simulated account for the next 2 months, and then get ready for a powerful 2018. And we also have payment plans available. So thank you so much, Tanya, for having me here, Traders Talk, and thank you so much, guys, for sticking around. I know it's been a I'm actually looking for earnings report to come out. So thanks so much for having me. Have a wonderful afternoon.